Donald Trump says he will bomb Iran's power plants, a civilian target, unless the country reopens the Strait of Hormuz by Monday evening. This as the war enters its fourth week. Israel has again struck Tehran and has itself faced one of its worst nights of the war as Iran's missiles caused dozens of Israeli casualties.
Whoa! Whoa! Whoa!
Video from the town of Dimona shows one of Iran's missiles reaching its target in Israel. They also struck the nearby town of Arad, leaving more than 160 people injured. Iran now says if Trump targets their power plants, they'll target U.S.-linked energy sites across the Middle East and close the Strait of Hormuz completely. The war has sent oil prices surging, with Brent crude, the global benchmark, reaching as high as $112 on Friday. The average price at the pumps across this country up to well over $1.70 a liter. Diesel even higher at $2.19. Bank of Canada held interest rates steady in their decision this week, but warned the ongoing risk is already causing inflation, and it could get worse. I spoke with Francis Donald, the chief economist with RBC. Francis Donald, very good to see you.
Thanks for having me.
We are speaking after the International Energy Agency warned that if we continue on the same path, the Strait of Hormuz, all the attacks that are happening, that we could see this war lead to the greatest energy crisis in the world ever. What does that mean for the global economy?
Well, effectively, it depends who you are. Are you an energy exporter? Are you an energy importer? Or are you are you a country that's dealing with higher prices like Canada is, but gets some offset from higher revenues at home? Or are you a country that is straight up just going to lack access to energy? That's like Europe and Japan and many countries in Asia. And so effectively, the first thing that comes to mind when I hear about a shock of this magnitude is the divergences that it creates, not just within our own country, David, between provinces like Alberta and Ontario, but between the haves and the have-nots when it comes to energy. I have to tell you, though, we just went through the largest trade crisis we had ever seen. Now we're piling on another so-called supply shock. The difficult answer here is when we see things we've never seen before, we don't know exactly how they're all going to pan out.
How do businesses, be they in Canada or elsewhere, plan for any of this? There seems to be no predictability.
Yeah, that's a great question. And effectively, what we tend to say is focus on what we know to be true. We know the Canadian economy is relatively resilient. We know which sectors have a lot of upside potential, like in tech, and we know which ones are struggling under the weight of existing tariffs. We know the population is declining in Canada. We know that we have much more fiscal stimulus coming through. So in a world where there's lots you don't know, focus on what you do. And there are plenty of Canadian themes that will remain true throughout that. Unfortunately, we know that when gas prices rise, consumers, well, they have to allocate more money towards gasoline, and that means a little less money elsewhere, or it means they pull down on savings, or they have to use credit cards, or all of the above. So a little bit of consumer weakness here should be expected, but the magnitude of that and how long it lasts is still a question mark.
Also a question mark is what happens to inflation with the impact of the war. We saw it below that 2% marker before the war, and so the Bank of Canada holding interest rates where they were, where they are now. But where might things be heading if Canadian families, Canadian business have to spend more for the very same products?
Well, the simple calculation is that if we have oil around $100 per barrel, you'll see inflation rise above 3%. So that sub 2% slim comfort for what could be coming ahead. What's more challenging is what happens to fertilizer prices. What does that do for the costs of some foods across the entire world? And problematically, this isn't inflation that's easy for anybody to fix. A Bank of Canada could hike or cut rates as much as it wants. That's not going to solve the Strait of Hormuz. And so this is a central bank that is dealing with inflation dynamics that are largely out of their control. It's no surprise that they said, we're on hold right now. We need to see, does this permeate more deeply through the economy? Meanwhile, growth has been a little bit sluggish on the other side of the picture. We're growing around 1% in Canada. That's not a very clear picture for the Bank of Canada to react one way or the other.
And all of this coming as Canada losing 84,000 jobs just in February. The fact that we have kept the interest rates where they are in the wake of that, what should we take away?
Well, economists will always warn those numbers have a lot of variability. We've actually had a fairly resilient job market. The unemployment rate is lower than it was last year. But the most important thing to recognize here is that while it looks like we're losing jobs, people are also leaving Canada. We have population that's declining. And just like if you go to a party and you invite 10 people, you need 10 chairs. If you have people leaving your party, you don't need as many chairs. And that's the exact same thing for the job market here. This economy does not require the same amount of jobs that it did when population growth rates are around 3%. So we don't ever want to see lost jobs. Look towards the longer term trend, which is still okay. We're still seeing the unemployment rate decline, but we have to be mindful that this is not the same labor market that it was historically. There's demand for jobs, but then there's also supply of labor, and that's shrinking in Canada.
I want to underline that because it is, we learned this week, the first time ever since Confederation that Canada's population has shrunk. You speak to some people leaving the country. There are a number of other factors. Temporary foreign workers, far fewer of them as a result of the Carney government moves. Even birth rate, which has long been low in Canada, continues to either be low or in decline. What are we heading towards if this becomes more than a one-year event?
Well, also, let's not forget we have significant retirement activity. And while those folks aren't leaving Canada, they're being pulled out of the labor force. Well, the first thing an economist will tell you is there's only two ways to grow an economy. There's people working or more people working, and then there's how much stuff and how much activity each individual person makes. So if we have fewer people working in Canada, we're reliant on the same amount of people to do more to generate growth. And in what we call that low productivity environment, well, this is going to weigh on things like economists' GDP estimates going forward. So one of the reasons Canada is growing at a lowly 1%, and you could think about your business growing at 1% or your income rising at 1%, could be worse, but that's certainly no number to go home and call your mom over. That's largely driven right now by the fact that we are not adding people anymore. The flip side to that is not all growth is good growth that gets distributed to everybody. We saw good growth numbers in the past few years, but many would highlight that per capita growth, the amount of growth that went to each Canadian, was actually shrinking. Now we'll have a little bit less growth, but it'll be distributed amongst people a little bit more evenly, a little more growth per person coming through. So in the short term, this isn't necessarily a bad thing, but it plays a lot with the data that we're putting forward, and it means that we can't always do apples to apples comparison. Same thing with the labor market. We could lose up to 10,000 jobs per month, and the unemployment rate will stay the same. It's going to take a lot of change in the way we think about the jobs market. Population declines, never seen it before. Another one of those never seen before that changes the way that we have to think about the economy.
Finally, Frances, I want to ask you about private investment. Long been a challenge to attract private investment in this country. The Carney government has made it a priority, has done all these international trips trying to get more private investment in the country. How are they doing?
Well, foreign direct investment has actually been improving for 3 consecutive quarters. We're attracting money into Canada. That's, of course, the gold market, strong stock market, and a lot of interest in Canada having what the rest of the world is going to need over an extended period of time. So long-term investors looking at countries that have energy, particularly in this environment, water, access to the Arctic, relatively stable governments, foods and agriculture. Canada has that. And this Carney government has helped to sort of gone on a marketing campaign and awoken the world to it. But now there's a lag time between when we actually see those things come to fruition. And 2026 isn't going to be the year where we see these projects materially rise out of the soil. It's going to be a little bit longer. So now the challenge is going to be, how do we maintain that enthusiasm about Canada outside of Canada and inside Canada as we're going through a multitude of shocks, CUSMA reviews, oil crises, and we don't yet see some of that government money that is planned for, but not yet in the system. I think 2026 is a year where we're going to be challenging a little bit that narrative of how much can Canada change and how quickly.
RBC Chief Economist Frances Donald, always good to chat with you. Thank you so much for your time.
Yeah, thanks for having me.
There is a new threat from the U.S. president this morning as Israel experiences one of its worst nights of the war. Iran struck Dimona, that is home to the Israeli nuclear facility, and nearby Arad. Officials say at least 160 people have been injured. Donald Trump has now issued an ultimatum to Iran: reopen the Strait of Hormuz to allow for the safe passage of oil tankers within 48 hours, or Iran's power plants will be, in his words, obliterated. Iran also responding to Trump's threat with one of its own, saying it will target all U.S.-linked energy infrastructure in the Middle East if Trump makes good on his own threat. Since the opening of this war, Iran has made it nearly impossible for oil tankers and ships to get through the Strait of Hormuz, a vital waterway which normally carries a fifth of global crude oil. That's why the price of crude is up around 50% since last month. Earlier, I spoke with the former head of the Royal Canadian Navy, that is the retired Vice-Admiral Mark Norman, about how militaries might become involved in retaking the strait. Mark Norman, hello.
Good morning, David.
I want to start with the U.S. president's comments to obliterate Iran's power plants if they don't open the strait. What does it tell you that Donald Trump is making that kind of threat now?
Well, I mean, we continue to see rhetorical comments like that from the president and his administration. To be honest, I don't think it's particularly helpful. I don't even know that obliterate is a word on the targeting, procedures, but nonetheless, it sounds emotional. It sounds punitive, and we heard this word before back in the summer as it related to the nuclear program, which apparently at the time was supposed to be obliterated. So I'm not a big fan. And the fact that they're targeting power infrastructure now just speaks to more, as I said earlier, punitive measures to try and apply leverage against the regime in Tehran. And unfortunately, this is just going to continue to make matters worse from my perspective. I think what they're trying to achieve here is capitulation, and I don't think that this regime is particularly interested in that outcome. And I think we're going to continue to see Iran doing the kind of things that they've been doing, attacking the Gulf states and continuing to cause havoc in the straits. And I'm still concerned that we're going to see some potential terrorist attacks against softer targets in Western democracies.
I do want to ask you just about some of the legal aspects. I know you're not a lawyer here, but it seems very clear that Iran has been targeting civilian infrastructure in the Gulf states. We've seen them hitting energy, but also hotels. That the United States is saying they will hit power systems, electrical systems, which are a civilian target. Is that not a breach of the laws of war? You're on a bit of a slippery slope to your point. It almost appears like a tit for tat sort of scenario. If you're looking to, as I said earlier, to persuade the regime to capitulate, then basically making the lives of everyday Iranians worse and worse is a strategy. I'm not sure it's the right strategy, this is where we're getting into. I think if we accept the premise that there was some apparent legitimacy to the initiation of this conflict in the first place, now we're getting into the really hard part, where they're just pummeling the hell out of Iran, to be honest, in the hope that at some point the mullahs and the rest of the regime are going to wake up and say, okay, this has to stop. That's not in their DNA, and I don't think that this is a viable strategy going forward. We have heard the U.S. president repeatedly, including just in the last 24 hours, talk about winding down this war, and yet there's no indication that is in fact happening, and no indication that the Iranians would necessarily stop, even if the Americans did. In the midst of all of this, we hear 7 nations, including Canada, saying that, and I want to read this, they have readiness to contribute to efforts to reopen the Strait of Hormuz. I want to read it because some of the language here is so specific, and yet also not saying a lot. What is Canada actually offering to do here, do you think?
Well, I mean, I don't have any insight into what they would have specifically discussed with those potential partners, but it does, notwithstanding the intentional ambiguity in the language, it does actually make some sense. I think that, if we look at the 3 belligerents in the conflict here, the United States, Israel, and Iran. Israel has no interest in backing down. They're going to be the most continuously aggressive in this regard. The Americans are now dealing with, to be honest, the second and third order implications of their actions. This is becoming increasingly unpopular, and President Trump is realizing that. So they're looking for an out. And Iran isn't going to stop until Iran has some sort of reasonable conditions. So we're to be blunt here, we're stuck in a mess. And why the middle powers, those democracies and influential countries you mentioned, would want to do this, it makes sense. And not just because President Trump was, to be honest, whining about it the other day. It makes sense because they can make a contribution. As for Canada, we have very limited capacity in terms of mine countermeasures capability, but we do have some people who are well trained and experienced in that regard. We do have some robotic equipment that we could bring to bear, and as part of a broader coalition of the willing, if I could put it that way, it does make a great deal of sense. It also makes sense that would be conditional. It's not explicitly conditional. And not to ramble on here, but my biggest concern in all of this is that the Americans start to withdraw, whatever that looks like. And what we have is a extremely damaged and extremely annoyed Iran with basically a new version of the same theocratic regime. That, to me, is a very dangerous scenario, and I don't see that being helpful in the coming months and years. We need a better end state here.
Let me lean on your naval experience here for a moment and talk about the Strait of Hormuz. So if we imagine a scenario where Trump makes good on what he said, that they are winding down and they actually wind down the conflict from their end, but the Iranians make no actual commitments about what they are going to or not going to do. If Canada is then among nations that goes in to help secure the Strait of Hormuz, what are the risks?
Well, if it's in the context of some sort of, I'll call it reduced kinetic activity in terms of the conflict, I'm not really overly concerned. And I think that although many would argue there is no distinction, I think you can make a legitimate distinction between direct actions against Iran, which is what we're witnessing now, and supporting the second and third order impacts of what was going on. Many might argue that there is no distinction, but in my mind, I think it's pretty clear. And so I don't see a huge risk. There would be risk to the people involved if Iran doesn't want the straits cleared. There's still some threat to those vessels, platforms, and people that would be engaged in that. But I don't really imagine much of a retribution threat. I mean, at the end of the day, we're already seeing Iran making public proclamations with respect to basically they're going to allow ships through that are friendly to Iran and not allow ships through that are unfriendly to Iran. Okay, fine. The issue here is it's the much broader impacts on the global economy with respect to oil, gas, and now increasingly we're seeing the impact on fertilizer, which will have a huge impact on Canada's economy going forward.
Vice-Admiral Mark Norman, appreciate your time and your expertise. Thanks a lot.
Thanks a lot, David. All the best to you and your viewers.
And we should note the federal government did say it was ready to help secure the Strait of Hormuz, though it didn't specify how. So we asked the federal Liberals onto the program, but no one was made available. Now, Iran's attacks on the Gulf states and the Strait of Hormuz have driven oil prices up by more than 50% since the war began. If you drive, you've probably felt the impact. But for those who drive for a living, the price is threatening their livelihoods. Earla Phillips is a rideshare driver in Ontario. Earla, good day to you.
Good morning, David. Thank you for having me.
Tell me, what's it like just every day going to a gas station and seeing a very different price?
I'm actually angry. I'm angry because I see, 20 gas stations all at the same high price, and I think collusion between companies. I see petro companies with record profits, and I think, yeah, that was on our backs. And it's extremely frustrating to see these kinds of things, and I think Canadians are all pretty frustrated with it.
Now, even Earla, the price that some of those companies are paying for oil, at least globally, that has increased significantly because of this war. How does it hit the bottom line of a rideshare driver like you?
Well, you know what? I want to be clear. The struggle that drivers are having as a rideshare driver didn't start with the current gas prices. I have a few notes that I'm looking at here. Drivers were already earning far below minimum wage and struggling to survive. Now these rising fuel costs are pushing the crisis of lack of earnings to where drivers are at breaking points.
What does it do to the bottom line? I mean, are people making money anymore?
I seriously doubt it. And we're seeing real consequences for drivers who were already struggling to, make their car payments. People are losing their vehicles. More and more drivers are relying on food banks. More and more drivers are looking for additional ways. So they've got more than one or two apps open, and they're working 14 plus 18 hours a day. It becomes a safety risk. And many newcomers turn to this work to make a living, but it's not sustainable. And that, becomes a safety issue also.
If we see gas prices stay where they are for an extended period of time, would you expect that some rideshare drivers would simply call it quits, say there is no money to be made anymore?
Absolutely. And we're already seeing that, commentary in groups where drivers congregate in social, such as Facebook groups or possibly even Reddit, places like that. So there's also real pressure for drivers, rideshare drivers, and passengers to go off app to make the numbers work. When that happens, there's safety protections that disappear for both the rider and the driver. The trips are not tracked. There's no accountability if something goes wrong. I worry for drivers and passengers.
The big rideshare companies could do something. They could increase the level of support, of financial compensation that rideshare drivers actually get. Have you seen anything to account for the rising cost of gas from those rideshare companies?
Absolutely not. And in fact, the rates are so abysmally low. I'll give you an example. On Friday, it was a very busy day because a large portion of our drivers were celebrating Eid. The remaining drivers were declining enormous numbers. I declined personally approximately 150 trips because the earnings were so low. The 3/4 of the trip offers were between $2 and $4. Nobody can profit off of that. And, this is just creating frustrated customer base. But yes, the companies can absolutely do something. They did a fair a fuel surcharge in 2022 when we had the last fuel crisis. They could do the same thing. But as far as I can see, there has been no comment from these big companies except for HOP saying they're monitoring the situation. Meanwhile, the people who are their fleet, we are the company, they don't exist without us, are just staying silent.
Earla Phillips, thank you for speaking out.
Thank you so much.